welcome to the D Street Verdict. Still analyzing how the markets are going to factor in and pricing in the budget 2026. By the way, as we speak, while the start was a meager uptick, that's clearly getting sold into now, and that churn is visible. Look at it, Shriram Finance, that's down nearly 4% as we speak. Max is down about 3%. And to think of it, Max Healthcare was one of the top movers on the index yesterday post-budget. SBI, a continual slide, 4.5% of a knockoff yesterday, another 2% down today. ITC is down, Tata Steel, Titan is unwinding from that bump up yesterday. Some of the metal names continue to weigh heavy, and even IT as a trade is seeing some bout of profit taking. Having said that, on the other hand, the market finally is taking cognizance of the good news, which it did begin yesterday by reacting to Tata Motors passenger vehicle numbers. The total sales were fabulous, 3% higher now on the stock, for a stock which actually gave up as soon as the budget speech began or after that. L&T is up in the green, Reliance is up in the green. So as of now, it's a bit of a tug of war out there. But as investors now digest the budget, what should be the key reading, and who better than Raamdeo Agrawal, the chairman and co-founder of Motilal Oswal Financial Services, to dissect and decode the budget today with us. Raamdeo, great to have you once again on ET Now. And I was just going through some of your notes, Raamdeo. You've called the 100% tax holiday for data centers until 2047 a £1,000 gorilla move. Tell me, why would you say that? Does this spark a 90s-style software boom? And which specific AI factory sectors, power, cables, or real estate should investors be betting on first?
Yeah. So, good morning, Aisha. You know, this £1,000 gorilla, if you see what's happening in the world, we were left out in terms of AI boom, AI infra boom rather. This is humanity's biggest infra build anywhere in the world. That's the data centers and data center capex which is happening. And ancillary to that data center, you need a lot of power. I mean, it's a power guzzler. So, but we were missing out on this particular move, which is actually powering entire America in a big way. Today, America is really rocking only because of this particular boom. And now by doing this, 22 years tax holiday, I mean, with the country which has the highest competitive edge in doing a data center, the cost of infrastructure will be lowest, cost of running people will be lowest, cost of power will be lowest. Will be able to provide as much green power, gray power you want. I think this particular opportunity is absolutely what was needed, and this is going to be incremental growth. Let's see whether some people are saying 30, 40, 50,000 crores kind of a new investment can come very quickly. But God, no, I mean, in 95, it was very difficult to figure out that India will do $250 billion of software exports. And even GCC is happening on the back of it. So these are the things which you cannot say how big it will be, but this is a game-changing kind of a thing. Apart from whatever other things are there in the regular way in budget, this one was completely out of syllabus, out of box, and I think it will have far-reaching impact. Maybe not in 6 months, but as we go forward, I think this is going to be a game-changing thing. It can actually change the outlook for the country, outlook for the markets, because markets were disappointed that India doesn't have any AI play. Now we are right there. So I think it is going to be a big thing.
Since you said out of syllabus, Raamdeo, have to talk about the STT hike, because you had warned earlier that the hike in STT on futures and options makes many high-frequency and arbitrage trades unviable. And this was your view last time also when it was hiked.
Yes,
Tell me, is this now a permanent structural shift that will sort of squeeze market liquidity? Or do you think this is just a temporary speed breaker, which the markets reacted to yesterday?
No, I think the intention of the regulators or the policymakers or lawmakers in Delhi, that is very clear that they have been trying to curb this speculation, and that's first series was November 15th, 2024, when they unwounded all the weekly contracts into monthly contracts. So that was the first one for which we are suffering for last 4 quarters. If you see all the brokerages, I think the earnings are down by 25-30% year on year because of that. Now, just about we are coming out of that particular kind of headwind, and now we have a fresh new headwind where the FNO and option contracts will become far more unremunerative for the high frequency traders, and that will suck the liquidity out of the market. And how many trades will become unviable, I don't know, but definitely it is a headwind. Only time will tell how badly we get impacted. But another 4 quarters, I think, will remain in slow land in terms of growth. Maybe after this Q4, I was thinking we'll again go to 25% kind of growth. Now, I think that may not happen.
Oh, so that's big because what we were penciling in was that growth will be stronger, but you're suggesting that there will be a taper down. I'm trying to understand, does this make it commercially unviable for a large, significant portion of your clients in terms of doing FNO trades, or is it a minuscule composition of your clients? If you can just give us a sense of that.
Yeah, see, any trade, the profitability of a trade goes down. If you're making, say, in a trade, if you're spending, say, $500 and you are expecting a profit of, say, 1,000 rupees. So by spending 500 rupees, maybe you'll make now 300 rupees or 200 rupees. A lot of your cost itself will go up for the same trade. So how the markets react to this situation? Because as the liquidity dries up, the cost of trade further goes up because the bid and ask spread goes up. So what will be the total impact in the market, and how the speculators will behave? I wouldn't know, because in fact speculators themselves will not know. We'll see the activity as the time passes, and if there is too much of boom in the market, the earnings growth is like 20, 15, 20, 25%, then of course it doesn't matter that much about this particular incremental cost. But I think it was not timed well, and it was not expected. More important thing was that it was not expected this point of time, because markets have become very important. Market was a little jittery because of earnings slowdown and the trade fronts, whatever is happening. And currency is also weak. So in that situation, when this comes in, this is a added a blow to the market. But I think market has weathered it well, and impact hopefully is limited as we go forward.
Raamdeo, you've got the now big one, right? NSE IPO coming up. The clearance has already happened. That's on the horizon. Then you have these new tax hurdles. We're already sitting at a $22 billion FPI, FI outflow. You've suggested that markets may enter a phase of consolidation. Would you say that the markets would perhaps ignore the good news, earnings pick up, revival, etc. on the horizon, and maybe focus on that, on these tax hurdles in the interim?
No, tax hurdle is only for today. You'll forget it tomorrow, I'm sure. Maybe even by 3:30 it will be done, because the budget is so brilliant on every other aspect. It's very balanced in terms of fiscal consolidation, in terms of a lot of initiatives on the capex, and as I talked about AI and technology thing, which could be very big. And I think we just met the minister here, and I think his confidence and commitment that the trade agreements, the trade agreement of EU and many other countries have already been concluded, and actually trade agreement as per him is concluded with US, with few here and there. So any day it could be signed, and so it is very much coming in. So I think nobody knows when it is going to come. He also may not be very sure. But now markets have corrected very well, and it is waiting for flurry of good news. Look at the auto sales for January, which is coming in. I think telco PV has done more like 40%, 45%. TVS has done for 27, 28%. M&M has done 25%. So I think the economy is picking up. Credit flow is like at 13, 14%. GST collection is up 6%, despite the fact that they have cut the GST by 10%. So I think economy is picking up. Earnings will pick up as we go forward in the quarter 4. I think earnings this quarter will also be good. Next quarter will be even better. So I think finally markets will do what the earnings do. So if the earnings grow by 15% next year, I don't see any reason why the index will not go to 30,000 or something like that, or 15, 17% the same. So so earnings are the most powerful thing, and that actually this budget has only helped, not deterred.
And Mr. Agarwal, I'm trying to understand where are opportunities cropping up. So you're clearly sounding much more bullish. Are opportunities better within the large cap space, or are opportunities better within broader markets? And in terms of the Nifty earnings pickup, we haven't seen that happen substantially yet. When do you expect that to play out?
Yeah, as far as the Nifty earnings are concerned, I think it is going to be the next year which is going to be far more pronounced. This year will remain muted. Already 3 quarters are done, so the fourth quarter in itself can be much higher, maybe 11, 12%. Right now, we are tracking at about the overall Motilal Oswal covered companies. About 139 or 140 companies have come, and they are doing about they're running ahead at about 10 to 11% kind of earnings growth. Index itself is tracking at about 7, 8%. So my sense is as we go forward next year, I mean our expectation is clear double digits, more like 12 to 14%, and that will be the start of a new run of a new trend in the bull market. And so the earnings are, in my mind, it's earnings, earnings, earnings. I mean market can have a different pace of what you call movement, in the sense that earnings may grow by 15%, market may still not do anything because there are other issues of demand, supply, and whole lot of things. But for me, the only God is the earnings, and if the earnings are growing, I'm pretty comfortable that we'll do well. As far as sectors are concerned, I think it is being led by banking, like likes of SBI and all. I think results are yet to come. So that is one. Second, autos are doing very well. Capital markets were likely to do very well, but brokerages are somewhat hurt. But non-brokerage, what you call capital markets, whether it is asset managers, whether it is wealth managers, your depositories, I think market intermediaries, they will also do very well. Then other sectors will also pick up as we go forward. So for that, you have to really talk to our analysts, which are the places where earnings are actually coming up.
Besides earnings, though, Ramdeo, which I know you've always tracked and always gone by in, in terms of making investment calls, does the FI outflow bother, and how do you cope with that?
Yeah, so the FI, the way I see it, that FIs are very neutral guys, in the sense that they're also in the business of investing, and they are the only pipe between India and rest of the emerging markets by way of arbitrage machine. So if by chance India is relatively more expensive compared to rest of the emerging markets, and for the given earnings growth, they will keep selling. India will become funding market, and other rest of the other emerging markets are receiving markets. So right now, our since earnings are not picked up, the moment earnings go to double digit, 12, 14%, you will see slowly the same FIs will start changing the trend from selling to buying. But we have to wait when does that happen. But I am very hopeful at some point of time in next 5, 6 months, this trend is going to change.
So one thing you spoke about was data centers. That could well be the theme for the next 10 years. What else within the budget looked extremely interesting to you in terms of a decadal theme that you could very easily kind of pick?
Yeah, so see, the budget job is to do the government's what you call accounting. From where money is coming, where it is going, and how they are allocating for the capital expenditure within the economy. And that job they're doing very well, in the sense that debt to GDP, that consolidation is on big time. Now it is at 56%. They would like to be less than 50%. And I believe this India probably will be the only country, only emerging market country, where debt to GDP would be less than 50% or around 50%. So I think they're going about managing economy in a most sensible way. And and you can see that in the way banks are being managed, the lowest level of NPAs which are there. Credit growth is now picking up to 13, 14%. So I see every aspect of economy is being taken care of, whatever is within their own what do you call prerogative. They are doing very well, and economy. We are the fastest growing economy. We are growing at about last quarter. I think Q2 was 8% plus. My sense is Q3, Q4 will again surprise all the economists in terms of the numbers. It should be due any day. My senses will be upwards of 8% or so for Q3 and as well as Q4.
The always bullish Raamdeo Agrawal. But Raamdeo, as a closing comment,
Yeah.
what would you like to tell retail investors? Because in the last 2 days, what's happened with silver and gold also has sort of dented their wealth
Yes.
effect emotion.
Yeah, yeah. So I think they have to keep their cool the same. Don't do what you don't understand. That is the first thing. I mean, if you don't understand gold, silver, stay away from that. You don't have to make money where the fire is maximum. So stay away from those speculative, what do you call, inferno, which is on right there. So and do stock picking. I mean, the corrected market is the best time to start in the market. We have a corrected market, and there are corrected stocks, and particularly mid and small. I think there is a literally some people were saying that there's so many companies which are down by 30-40% also. So I think if you understand them, if you know them that they're available at below fair price or at fair price, I think you should start investing. I mean, best time to start investing is when the markets are corrected.
And there's no better time than today. Raamdeo Agrawal, always a pleasure speaking with you. Thank you for your time.
Thank you. Thank you.
Okay, that's Raamdeo Agrawal talking about staying the course and the time when the equity markets are most beleaguered and hated. Perhaps that's the best time to invest. It always is. But on that note, we're going to wind it up on this special edition of the Market Verdict. News, of course, continues on the other side.